Roshni, is there a schedule of the next increase published at this time?
I don't believe so. I think there's quite a few things up in the air of what's going to be anticipated. I don't think there's anything official
I know looking backwards for the last 2 or 3 years, we've seen the increases coming and 50 cents here, a dollar there, and this is the biggest one. I was wondering if we're kind of at the end of the rainbow, hopefully, because it just amazes me. You know, I'm not that old, but I remember working for $3.35, my first job.
That was Roshni and Troy from Everyday HR Podcast. Everyday HR Podcast is a local podcast where HR professionals discuss common everyday HR issues, solutions, and trends. You will hear firsthand experiences from a consultant, legal, and benefit advisor. This will be your place to learn and hear relevant topics and strategies about everyday HR concerns that matter to you and your business. Roshni Patel is the founder and CEO of Thrive HR Consulting, where she focuses on all aspects of HR, including recruiting, benefit administration, payroll, leadership development, performance management, and compliance. Troy Burden is a licensed life, health, property, and casualty specialist, and his experience spans over 20 dedicated years. In today's show, we discuss the increase of minimum wage, several HR compliance changes, plus any benefit compliance changes, including the Form 1095, and then we end the segment on all tax deadlines, including 1099s. Make sure to follow and listen on all social media platforms.
Welcome back to the Our 2 Cents podcast, the show where your local professionals sit down with an array of guests to hear their story and impart some wisdom for both business and life-improving skills. This is your place to hear business and community leaders discuss relevant topics that matter to you.
Welcome to today's show. My name is Amanda DiGiacomo. Before we get started on today's episode, I would like to encourage our listeners to go to our social media platforms and our websites to catch up on most recent episodes. Today, I have Roshni and Troy. We are happy that you're joining us, and we're going to be talking about a lot of things that business owners are going to want to hear, a lot of HR compliance and benefit deadlines and changes and updates and tax deadlines. So we're really, really excited about that. And we're going to start it off by talking about the new minimum wage increase.
Hi, Amanda. Yes, minimum wage was a big hit from many businesses here. For small businesses that were 26 and less, it was prior minimum wage of $14 an hour. So now jumping to $15.50 for everyone is quite a big jump for many. And
yes.
Even though California had staggered minimum wage over the past 7 years, this is by far been the biggest increase for those employers at the very least. So that went into effect as of January 1. So any hours that were worked as of 1/1 should be at the rate of pay of $15.50. So that was definitely a good start to the year for those employees at least.
Yeah, so I guess this is your reminder if you're running payroll, because I've been reminding my clients, you need to be updating the payroll software that you're using, because the software will automatically update it for you. So you need to be going to each employee who's minimum wage and changing it to the $15.50.
Roshni, is there a schedule of the next increase published at this time?
I don't believe so. I think there's quite a few things up in the air of what's going to be anticipated. I don't think there's anything official
I know looking backwards for the last 2 or 3 years, we've seen the increases coming and 50 cents here, a dollar there, and this is the biggest one. I was wondering if we're kind of at the end of the rainbow, hopefully, because it just amazes me. You know, I'm not that old, but I remember working for $3.35, my first job, and you have these discussions with your kids. They're going, "Wow, $15.50, I can't wait." And I go, "Yeah, welcome to the world of inflation."
I started $6 an hour.
Right.
And so the fact that it's 50. Yeah, I mean, it's hard. I'm a small business owner, and I think $15.50. I mean, not that they're, I value my teammates and things, but when they're doing just a basic administrative and they're working part-time, like that kind of hurts my bottom line because you have to pay taxes on top of that. So I can see how many businesses that this is going to hurt.
Yeah.
Entry-level jobs, not saying that they're very much needed, but you think about an entry-level job, someone working part-time maybe and going to school and that really hadn't settled into their career, that all trickles down. Mm-hmm. If you go out, you and your spouse go out for a burger tonight, you'll notice that it's not $15 anymore for you to have a meal. It's just everything has changed, and, it just got to trickle down. It's just, unfortunately, people are trying to figure this out, and it's pretty black and white in my eyes, but...
And not only just the fact of making that payroll update, it's the administrative part of how we communicate that to employees now. It's the tightest labor market we've had in a really long time. So when we're doing recruiting efforts and, you budget your business amount on payroll, and if it's $15.50, how, the perception of, okay, I'm making minimum wage without actually noting, oh, this is $15.50 an hour,
Right.
but I'm doing XYZ and I should make a little bit more than minimum wage. But at the end of the day, that all factors in of the employee's perception on their earnings too.
Yeah, I think it is definitely, it's just challenging. I can see both sides of it. And I just think it's, people are going to have to increase their prices. I mean, I have to increase my prices because now I have people above minimum wage and I have some admin that are at minimum wage. And it's just like, okay, well, I have to figure that into our costs. And that's like you said, you're going out to a restaurant, they're all paying their workers now $15.50 plus tips. That's going to, transfer into the price of food and price of services now.
And it's such a tight labor market. You see the fast food chains that are now trying to make it lucrative and, advertising that they pay $22 an hour, just to be able to work at a fast food chain. So,
and they're looking at cutting those costs. In my opinion, I just had this talk with my mom. She's a little older. She's a senior and she struggles with technology, and she just went to Taco Bell the other day and there was a kiosk there. And I said, Mom, that's the new model.
Yeah.
Trust me. And to be honest with you, I went to Michael's this year at Christmas. Michael's has kiosks now. And I don't want to say that's an older hobby, but these are things where some people aren't really savvy with technology and they're eliminating that human element. Yeah. It's always been in grocery stores. They got an express line here and there. But now we're starting to see it in fast food and a lot of retail, because to put an employee out there at $15.50 or more, maybe even though you might lose with the inventory or stealing, perhaps, okay, a loss revenue, a loss concern there, it's probably less than put an employee on and offering benefits and the whole 9 yards. So
training and keeping them compliant, up to date. I mean,
the hardest thing that I see, Amanda, is, and I had this discussion a couple of years ago, a company was bringing people in at minimum wage. Back then it was probably $13, maybe even $12.50 at the time. And educating them and get them in through classes and get them to a certain point, and then actually giving them an increase because they've accomplished it. And so now they're up at the $15 an hour. Well, now they have to hire people who have no experience at the same level. So now you got to take your your person that's been there 3 years, and actually for appreciation, you got to kind of increase them because they're at a different level. Employers are having a hard time maintaining that.
Yeah, no, I would agree. And I mean, yeah, it's a hard topic for sure. And I think that it's been advertised that they're supposed to be changing it. But we're second week into January and I'm still running into people like, oh, I didn't know. So I don't really think people are going to be reaching out and complaining and doing anything until February, when it's like, hey, people are now like, hey, I know it's $15.50. My pay stub isn't reflecting $50.50. Put me at $15.50. So I think we're going to see that in the next few months. A lot of business owners raising prices, going out of business. When you compile the logistics of supplies and things coming in and how long and the prices of those, and it's just one big mess, I think, is going to happen. And then they're predicting the recession. So I think it's going to be interesting what's going to happen here in the next few months.
Now, Amanda, you mentioned you have some clients that you do payroll for, that we plan for those that might not be so up to date. Do you help them figure out like back pay or how that's calculated, or what best practices should be to at least fix anything that they've missed?
Yeah, I mean, typically with a lot of my clients, I already kind of give them that update. But yeah, I mean, sometimes they don't read the emails or the updates or the things that we post on social media. And so then they might have missed 2 weeks of, I didn't increase these people at minimum wage. And that time, I help them run an off-cycle payroll. We prorate what the hours that they needed for that time that was missed for, that $1.50 that for those hours that they missed. And then, we write an off-cycle payroll to help offset, what they need. But it's a new question that when I'm onboarding new clients now in the new year, hey, are you aware that this went up? Are you paying your employees this? If not, we need to go back and fix that.
And then another point that just occurred to me right now too, we're talking about the hourly rate of minimum wage, but that also transfers over to those exempt employees that get salaries too.
Yes,
we need to make sure they're making their minimum salary requirement too.
It's double the minimum wage. And so if you're not doubling them from $15.50, you need to now increase them, or now they're not a non-exempt employee and you have to pay them overtime. So that's a great point.
Yeah, I think there's a lot that goes along with these minimum wage updates.
But not only the income has to be $31 to be an exempt at this point, you still have to have job classifications in order to be an exempt employee. You just can't say, our receptionist is an exempt employee because she's making $31 or he. Right. That's not the case. They need to have responsibilities of
our license being categorized as professional.
Yeah. So that's one of the biggest. If Dan was here to talk about labor law concerns, that's one of the biggest things we see is classifications not being correct for sure.
Off the air, we talked a little bit about also the new benefit trends, which I think you have a bunch of things that you're going to discuss with us now of new things that are changing in the HR. But we kind of discussed a little bit about the new trendy thing about unlimited PTO.
Yeah, that's definitely a big one. I think with the monetary compensation part being so volatile right now, a lot of companies are trying to get creative with benefits and perks that they might offer. Vacation time, PTO time is definitely a big one, and especially while the pandemic opened up a lot of opportunity where people self-reflected on their well-being, their wellness, prioritized a lot of their healthcare on themselves, and directly relating to time off and having that work-life balance is definitely tangible for employers to provide or enhance their PTO offerings. And I know that unlimited PTOs are very lucrative now, while employers are trying to do every effort to retain and recruit. And of course, with that, there's a lot of it depend responses,
yes.
A lot of caveats. You want to make sure you have a thorough, well thought out policy, make sure your accounting, payroll, your managers, your supervisors all understand what kind of policies and how you want to administer something like that too. Are we going to measure someone on their performance and measure that directly to their attendance? How do we stop someone from taking too much PTO?
Right.
How do you make sure people are using them, because there are plenty of people that might just forget or are so busy that they don't feel like they have time to take time off. And if we're not tracking that, then that's something that can cause a lot of red flags too.
Right.
Of course, on your payroll and your pay stub, you have to show
how much PTO they have.
bucket.
And then there used to be where you have to pay them out. If they quit or got fired, you have to, whatever the balance is, you have to pay them out. So a lot of questions I'm getting, well, what happens to that payout?
And that's where your policy is going to be the golden document that you refer to. And it should be something reasonable. Typically, if your policy is standard, most people get 3 weeks, 2 weeks, 4 weeks, whatever. You set something by title. If you're at this level, you would be paid out on this much. And that's just part of the balance act that comes out of people that use it, don't use it, but everyone will get paid out on X amount of time
so
equivalent.
Can you have two provisions, one where it says specifically the payout, or because from what I thought I was researching, I thought I was reading that if you move to unlimited PTO, there is no payout and gets rid of it.
And that is correct. You can. I just feel like that's
unbenefit. Yeah.
Right.
I see what you're saying. Okay.
So, a good practice is say this is how much you would upon termination. And then you want to be careful on what's actually going to be in that bucket. When we say PTO, are we referring to the California paid sick leave? Are we referring to supplemental sick leave that your company might offer, or any other type of leave? And that's something to definitely be diligent on, is California's paid sick leave requirements should be a separate bucket. Even if you have a PTO bucket, I would highly encourage keeping the California requirements separate. That way it's protected. You have to have eligible reasons to be able to use that time. We want to make sure they're accruing that at your policy or giving that as a lump sum, whatever your procedure is for that, but making sure people have that available, that you're offering it, and they're able to use it for the qualified reasons. So a lot to think about when you're contemplating your PTO.
I think I just learned a little bit right now too. But yeah, I think, these are just a lot of different things that are coming up. And like you said, people with prices increasing, they're trying to figure out other ways, building that culture, building, a better corporate culture or corporate lifestyle or even small business lifestyle. Well, how can I make, other benefits, and pay out those benefits differently to help? So I think those are great suggestions. Do you have any other updates for us?
Those are a few big ones. And I think the pandemic kind of put a lot of the bills that Newsom had passed on during the pandemic got rolled over to this year now. So a couple big ones. The biggest one that I'm seeing is the new pay transparency requirement, where employers that have 15 or more employees have to and must post a job rate, the range that each job is that you would reasonably expect to pay. Now, there's a lot of clarifications that we're expecting from the Department of Labor. It's just went into effect 1/1. Every posting that's out there, whether it's directly on your website, through a third-party staffing agency, or wherever a job might be posted, we have to have the pay range available.
And I noticed a lot of job postings do not have that right now.
Yeah.
Probably about 10% is what I'm seeing.
And it's difficult because, for those that didn't have a formal formula or a calculation, for those that have been here for 30 years doing the same thing, might get paid a little bit higher. So how we set that range is there's not been any guidance, specific requirements on that. So it's whatever we reasonably expect to pay is what we're basing off of right now. It takes some thought of what we're putting out there. Obviously, that's going to make it a little bit more competitive on the candidate side, on competition for your business competitors too, of let's see what the market is and are we up to date and things like that. So,
but it sure can affect the morale of your existing employees too, because they may have been hired at a much lower level years ago, but it's not a favoritism, it's a law. So it's transparency is good. It's communication, and it makes everyone understand the situation. So
exactly. And then that has to be posted for anyone that's in California. So if you are a employer in Utah and you have a job posting, you have someone apply from California, they should technically have to have that requirement on their ad. And you will see, we're seeing that already now. There's like 14 states that already had this in place, where they'll say, we're not looking for candidates from New York, or just because they don't have that available.
Wow. Interesting. Lots of change.
Yeah, that is.
And then another big one is the expansion of the CFRA, the California Family Rights Act, where you get 12 weeks of protected leave for any qualifying reason. That can be baby bonding, being a caregiver, taking care of a sick family member. They've expanded the requirements now for who you can take that leave for, and I quote, it can be any designated person.
Yep.
Wow. And
that can change in any 12-month period. So
is that any size business, or is that for like 25 employees or more, or 50 or more? What's the overall requirements for that?
5 or more.
5 or more.
Yeah, so
oh my gosh.
That's pretty much everyone.
That's
it's
like me.
It's slowly expanding.
Didn't know that.
Should have stayed at 4.
Yeah. Oh, okay. So now I have to. So we all have to comply 5 or more with this 12-week time off for whatever reason, if they need to take care of somebody, bonding with the baby, all of that.
Yep. And they further expanded on the bigger employers. There was a requirement of 50 or more employees in a 75-mile radius. They took away that requirement now. So Troy just hit the nail on the head with it's pretty much everyone.
Yep.
Anyone in California now, 12 weeks of
Can you give
protected leave.
more? Because I'm listening to this and I don't really know, I guess, the requirements, so some of our viewers might not know. So what are the original requirements? So who pays out when they're on leave? Is it just securing their job? Like, I guess those are the questions that are already coming to my head. So I'm sure
you're wanting to know if you have to pay your employees while they take 12 weeks off?
Yeah, that's my main first
question.
Yeah,
it is a big one. So the nice thing is on the employer's financial side is that this is unpaid.
Yeah.
So it is unpaid. Of course, the state provides wage replacement programs, whether it's paid family leave or disability.
Right.
They can work with the EDD directly to get some form of wage replacement. But this is just 12 weeks of job protection of when they return to work. They will have their same position or something reasonably close as possible available to them when they return.
And then so this just really protects that they can take that time off and then not like fire them for taking the time off, correct?
Correct.
Okay.
Yeah, exactly. On that same note too, now also another protected leave is bereavement leave that California recently expanded on. There was no necessary requirement for an employer to provide this, but now an employee can take 5 days of an immediate family member passing and can take 5 days of, and it can be unpaid as well. It's 5 days for each occurrence. So hopefully no one loses too many significant family members a matter of a year, but just say someone needs to take bereavement leave 5 different times.
Yep.
Right.
They'll have that entitlement.
I didn't know about that one either, so that's interesting. Okay.
Yeah, all in effect as of 1/1 this year. So
Which
still
is
very
weird that
brand
they
new.
didn't put that as part of the COVID bills because, like, you know, unfortunately, a lot of people were passing away during COVID. I mean, maybe because things weren't open and funerals weren't being like held. But yeah, I'm interested to see why it's coming into impact now versus during COVID time.
That probably was part of the influence to get this passed.
And it's been discussed for, I want to say, at least a year or two as well. Or I should say a year or two even before the pandemic as well. It's just never made it as a top priority, but I think the pandemic definitely brought it up.
There's a lot of stuff back there brewing, Amanda, that
Yeah, I'm sure.
that you don't really want to know, because what we've talked on our podcast is eventually it becomes law, and some of them are very, very scary.
I mean, same thing with tax IRS stuff.
Yep.
I mean, they put some of these, you know, things in the COVID bundles, and now it's either going away or they're extending it, or it's the same thing on the tax side. And the things that happened during COVID that they're trying to discuss now moving forward on what to do. So yeah, I think on both sides of any industry we have that's, from HR to benefit side to also tax side, there's just going to be constant changes, I think, coming in the next few years. So.
Absolutely. And it's a crazy time that we're in such an information age. Your employees are getting news fed to them, tweets.
On TikTok.
Yeah, exactly.
That's right.
So it's really important to be at least a little bit knowledgeable or have those resources that you can defer them to. And at times it could be a little bit of a scare tactic, but there's always a way that you can figure everything out and, truly have good foundation, just because I think I found that over the past 2 years, just personally too, there's plenty of businesses that never really needed HR, didn't really, have a need for it, or definitely not internal. But now there's been so much that's just been thrown at them from at the federal level, at the state level.
There's just so much. I think hiring a professional is just in your best interest if you're a business owner. Or also listening to the podcast like the one we're on today, or the one that you guys are representing, which is the Everyday HR podcast. Finding your local professionals, researching those local professionals, making sure that they are licensed professionals and they're not just somebody on TikTok telling you what to do. And, asking them for advice, follow their newsletter, follow their Instagram, follow the podcast, educate yourself so that, when your employee or somebody does come to you with something they saw on TikTok or Twitter, you can be like, no, that's not really the law. This is what it is. And then just have that peace of mind and a confidence. I mean, I know I hired someone to help us create an employee handbook because I wanted the peace of mind of like, hey, it's in the book. I made you sign it when you started. We reviewed it for an hour when you started. These are the laws. It protects me. And there's just so many businesses I come across that don't even have that set into place. Yeah, I think it's that time, and it's job security for us because, I think that because it keeps changing, they're going to need it. They need someone to interpret that law and help keep them educated.
And I feel, and I know you do too, because we all specialize in the small business market. Maybe we do some larger, but we really specialize in the small business market. And we feel for these employers because they're small. And we're just talked about minimum wage. It hits them right in the head. And then you think about an owner. They're doing payroll. They're being HR. They're being salespeople. salespeople. They're doing the warehouse work. They're making sales calls. They're doing it all. And maybe they can't afford a in-house HR person or a bookkeeper at, whatever level that might be. That's why they should reach out to people like you, Amanda, and you, Roshni, because they don't have to pay us every month. We can do jobs or projects and be in and out and keep them in compliance. And as you mentioned, which we appreciate, Everyday HR is awesome. We just did an episode on handbooks,
That's
performance reviews, because it's so important. And these are tools that employers can use so they don't get in hot water and have to call our friend Dan Klingenberger as a labor law attorney to support them in court because they didn't cross the T's and they didn't dot the I's. So our little unit here is very valuable to the small business people. And I really feel that we have a great niche and a great partnership amongst us.
Yeah, I would agree. And I just think there's so many interesting topics. Like for one, in California, if you have 5 employees or more, you have to do sexual harassment training.
Yep.
That's a lot of people don't know that.
Retirement plan.
Yeah, retirement plan, which is the Cal Savers, which we've discussed this many times, all last year. Or even like in some handbooks, now they're starting to put, domestic violence time off, pronouns, and the ability to have that culture and that atmosphere. So I think it's ever changing, the industry, and it's, great to be listening to podcasts like ours and to be connected to professionals like we are.
Absolutely. It's a great network, and I think everyone has their expertise, and having those people that you can just pick up the phone or send a quick email, even if it's just a question, I think that's the biggest value I think that, we have amongst ourselves of being a good resource. And you mentioned harassment training, and I made a note of that too. With it being the new year, anyone that's got promoted, any new hires still need to get their supervisor training within 6 months of a promotion if they were at an employee level prior. I'm sure there was a lot of promotions, movement within organizations, so that's a good one to tackle early on in the year as well, making sure you're compliant on all your training, make sure everyone's done it in time. The requirement is once every 2 years, an hour for regular employees and 2 hours for anyone that supervises doing
that's
2 hours.
Sexual harassment training?
Correct.
Okay,
yeah.
Just make sure. Okay.
Yeah.
Yeah, that's great. Do you have any more tips for us before we move on to Troy with all the benefits and changes he has?
I could talk for hours, but I know that COVID, we're watching really closely. It's still not gone away just yet. They've extended the workers' comp presumption that if an employee tests positive, the presumption is that they contracted that at their place of employment. So that reporting requirement is still extended through January 1 of 2024. So those still need to be done. We should be hearing any day now on an updated Cal OSHA update for not so temporary now and making it more of a permanent standard of notice requirements, possibly changing, paying for when you have to pay for employees to go get tested, providing that time off and providing testing at the employer's cost. So we should see a few things being a little bit more relaxed, but we're keeping a close eye until they formally issue an update for COVID.
Roshni, I'm not sure because I didn't track it. Too many things to track. Is COVID pay been extended for someone that goes out on COVID pay where the employer still pays them and gets reimbursed?
That actually ended December 31st. So it was already extended twice and from September, and it ended on December 31st.
That's a little shocking to me.
Especially if they're still keeping, but it's Cal OSHA that's changing it, not OSHA. These regulations is what you said. So that's just a California thing. So it's not an overall OSHA federal thing. So that kind of makes a little sense. California is always more on regulations. But yeah, so California, I mean, we're only a couple days in January here. They might come out and be like, oh, well, because we extended Cal OSHA regulations, we're also going to do a California extension on
and retro
COVID pay.
Oh, yeah.
Yeah. So I don't think the federal will do that, but California might. So
it wouldn't
never
surprise
know.
me.
Yeah.
Well, that's great. Anything else to wrap it up?
I think those are the biggest ones that everyone should definitely highlight, prioritize, spend some time considering if you haven't already. And I think that's plenty to do, I'm sure, for most.
Well,
that'll keep people up at night.
It will. And you've given so much good information. I mean, already my mind's ticking on like, okay, well, did I do that? Okay, did I do that? Yeah, so I think thank you very, very much for all that. Troy?
Well, thank you, Amanda. I'm in the employee benefits arena, and there is a lot of things to do after the first year. There's a lot of things to do every month, but there are certain requirements and timelines, which is kind of what we're talking about today. And one of the biggest ones is 1095 reporting. Every employee that has coverage needs to provide documentation called a 1095 to their tax preparer to show coverage 9 out of 12 months in order to not pay a penalty. Employers do not have to do this. It's called 1095C unless they have 50 full-time equivalents. And we can have that discussion of what is an equivalent. That could be another show in itself. But basically, if you got a lot of minimum, you don't have full-time hour people, you put them in a pool, and basically every 30-hour unit is a equivalent. So to make it somewhat simple. So if you have 50 full-time equivalents, you need to do 1095Cs. C is in Charlie. And you also need to send a 1094 to the IRS. However, they have gave us a 30-day extension on the 1095C to the employees, which is their physical 1095, but the 1094 has not been extended to the IRS.
Okay.
Which makes no sense to me because
just to clarify,
they go hand in hand.
Okay, so the form that you're discussing, I believe, is what shows the insurance they've had and health insurance.
Their insurance was minimum.
Covered,
yes.
And if there was on the market and if they had paid premiums and things, because I get a lot of questions when I ask it for this tax stuff. Well, I don't know what that form is. So just to clarify to listeners, he's talking about it's a health insurance form that it's provided to show how much coverage or if you paid premiums in the market, because we have covered California, right, which is a different tax thing that I won't get into either because that could be a whole different episode. But yeah, so just to clarify a little bit.
I'll break it down from 1, 2, 3, 4 steps. If you are not on coverage at your employer and you bought insurance from the exchange, Covered California, you will get a 1095A. If you are an individual buying insurance from a carrier and not through a group, you will get a 1095B. And also, if you're a small group, you get a 1095B. And I'm going to lose you here. Even if you're a large group, you get a 1095B. Okay? A and B. But employers have to report if they're 50 full-time equivalents, it's called the pay or play mandate, to prove that they offered everyone coverage that was minimum value and affordability, which means, here we go, you can't charge your employee more than 9.61% of their W-2 income.
Okay.
So that's the deduction. If it's more than 9.61 of what they make for themselves only on the lowest base plan, that's considered non-affordable. If an employee goes to the exchange, that employer will be penalized from the state of California.
Okay.
And that's what this reporting is about. So it's a transparency rule. We talked about that. So we're giving it to the employee so they don't get penalized on taxes. We're telling the government we did exactly what you asked based on the Affordable Care Act. And we send a 1094 to the IRS and says, here's the data. And there's two ways to do it. They may come back to penalize the employer, or they may go to the employee and say, by the way, Amanda, I'll use you. You're not eligible for an exchange product because you work for a large employer that did exactly what we want, and we need to get all those subsidies back. And I have this discussion in every open enrollment meeting I have, and I don't care how many groups I have. There's always a few in there that don't listen, don't understand, and still go to the exchange even though they're not eligible.
I have this on the 1095A, so they'll give it to me, and then it actually made them owe taxes because they reported that they made 30 or 40,000 in the year, and they made 100,000 in the year. So they were paying the premiums based upon 30,000 and salary for the year, but they made 100, so your premium is changed. So yeah, it's the same thing even with the A. But that's interesting.
And it's a nightmare, and you cannot ignore this. And they're about 2 years behind in auditing, and I see them about every month come across. And I'll just give you an example. About 100 life group, one person goes. Penalty started at $3,000 per person. So 3,000 times 100, and you could subtract 30. It's non-tax deductible. So you got to prove, and you need documentation that you offered it to your employees, which, I can go on and on and on about things that you need to do to cover yourself when these things happen, because they are out there and they are real. But other than that, there's a lot of things. Back to one thing about the 1095, which is talking about exchange as well, is something called the family glitch. It's just been finalized. And so now in the past, if I worked for a large employer that provided minimum value and affordability, my spouse was disqualified to go to the exchange as well. My kids could have or qualified for maybe Medi-Cal, but my spouse was disqualified. Well, now they will be eligible if the household income qualifies them to go to the exchange. So now employers are allowing mid-year changes when the exchange opens, is usually November 1st through January, to make a change even if it's not your open enrollment. Because in the past, you're not supposed to make changes unless you have a qualified life event.
Right.
Especially
Unless
if you
it's
have
open enrollment. Yeah.
Especially if you have a cafeteria plan, which is pre-tax law, says, hey, we're in this for a full plan year unless you have a qualified life event. Well, now, is the exchange opening a qualified life event? No. So now they just grandfathered in and said we can put an amendment called the family glitch. So employers, most people have cafeteria plans, Section 125s. You need to revise your plan docs to allow mid-year changes for the family glitch. So that's something that needs to be done right now. ERISA docs need to go out. If you have ERISA docs, that is more than one podcast. I can talk about that. Flexible spending accounts, discrimination testing is very important. As a bookkeeping concern I have, audit all your carrier bills 60 days after the renewal. You'll be surprised what you find. A lot of people miss, some people incorrectly enrolled, and so on. So it's very important. Don't wait 9 months. Terminated employees are still on the bill. There's a lot of human element out there, and there's still a lot of mistakes, and it's very important to do that.
Or they're in the wrong, like platinum versus a brown versus whatever color they have nowadays. But yeah, definitely. 5500
filing your Schedule A's. If that's if your effective date, wherever your effective date, 6 months after your effective date, you need to file a schedule or 5500 with a Schedule A if you have 100 employees enrolled. And that is an ERISA requirement. And then the annual report, summary annual report, circulate all disclosures, meaning anyone that waived coverage. I just talked about proving that you offered it to someone. Well, you can't say, well, I offered to Amanda Hunter 2 weeks after she started, and she said she didn't want it. She was insured from her spouse. You need documentation. Dan would tell you if he's here. If it's not in writing, it didn't happen in a court of law.
Right.
Very, very important to keep you out of hot water. New law passed actually December of last year, 2 years ago, I guess that would be, is compensation disclosures. Your broker needs to tell you what they make, and so does your consultant. It's transparency laws, and there's a lot of transparency things coming. Medical providers will be posting cost, hospitals, pharmaceutical. Trust me, they don't like it. They've been pushing pretty hard off. Waivers, proving everyone had it. Dependent audits. Schools do this. Self-funded plans do this. Prove to me, Amanda, that is really your child. Legal guardian.
Oh, wow.
Yeah, that's big in schools. And I insure a couple, and every year it's like, I need your marriage certificate and all the birth certificates to see if you are the mother or father, depending on the situation.
Now, that's a federal regulation?
That is not a requirement. That is typical. Okay. That is a choice, and it's usually done on self-funded plans because you're insuring people that may not be legal dependents, and that's risk on your pool.
Now, I've had some carriers just throw some curveballs sometimes too. So I think it's important to know what carriers you have, what their specific requirements are too, because I think you never want an employee right there in front of you and you're stuck or you're not able to help them when, if they're going through difficult circumstances.
I think you're bringing up a good point because I started asking for divorce decrees and child custody agreements because, especially during COVID, everyone was some people have every other year they claim the child or they don't get to claim the child because it's in their agreement that the other person's supposed to claim it, but they were trying to claim it for the child tax credit. So yeah, I think that's an interesting point that you're bringing up because I think we're seeing it too on the tax side that we're having to ask for additional information to make sure that you can claim this child.
Well, you could marry somebody that has a child from another marriage, and it could still be your legal guardian, and insure them on insurance. But they want to see that proof because I've had many people. Can I put my neighbor on this? Can I put my aunt on this? My cousin, my mom, you name it. They've asked, and so it's usually not every employer, but it's the self-funded ones for sure because they're trying to eliminate a lot of liability. Very important one, and this is something I see a huge liability: employer-paid benefits audits, which means if you work for someone full-time, regardless if you're waiving off the medical insurance because you have coverage to a spouse, there's employer-paid benefits. Usually it's life and disability and maybe EAP and some other things. everyone should have that regardless. And then voluntary benefits, make sure you get waivers that everyone's aware of voluntary benefits, because if you omit and not offer that to them and someone finds out that they could have received money if maybe a catastrophic situation happened, it's like, Amanda, you offer a cancer policy in your employment, but no one offered it to me. And boy, sure would have come in handy, because now I've been diagnosed and I found out. Jimmy told me, he says, well, put it into your cancer policy, and I'd have got $15,000 to, wish me well and give me some secondary choices. Well, I was never offered. So that's discriminatory, and now that's an employer liability. Wow. So very, very important, probably very commonly overlooked. Salary redirection agreement on file. Salary redirection agreement basically states that when you make your elections, you're in for a full plan year. And it also says, Amanda, that I'm giving you authority, the right to deduct X amount of money out of my paycheck. I'm agreeing to these deductions on a month-to-month or year-to-year basis. So it gives me all the legal rights. Employers should not just take money out of someone's check unless they have signed something agreeing to that.
Yeah. Garnishment is a big one nowadays.
Yes.
Yeah.
Evidence of insurability on life insurance. Anyone has asked for additional life insurance needs to fill out evidence of insurability, which is a questionnaire. It's an underwriting process, and you should not let those things fly around forever. If employees do not engage and get the required information to the carrier, you should put a timeline. We usually put 60 to 90 days on it and cut it off. I have walked into groups and find out that they have open EOIs for 9 months, and I've talked to payroll, and they have been making payroll deductions for 9 months, which is never a good decision. You should always payroll deduct the base life and pin the voluntary life until it's approved. It does not retro back. It starts at the time of approval, because when an employee looks at their paycheck and says, oh, they're taking that $200 out of my check for that extra life insurance I chose, so I must have it. So I'm ignoring these letters and I'm not filling out that EOI because I already got it. Big liability, because...
and that ties back to when you mentioned earlier to audit your invoices as well. You can double check what people are enrolled in. Yeah,
there's just a few things. Beneficiary updates. We do that every year in our groups. Roshni thinks it's probably a good practice as well, because we find that people pass away. We pull the beneficiary card from 15 years ago and find out that Joe may have left all his life insurance to his ex-wife, and his new wife of 10 years is not real happy about that. So we force people to update that, and we always encourage people never to leave it to a minor child, because that is a probate program, and that's never fun to get that money. And I already talked about 1095. Controlled groups is another thing. When we talked about the 1095, controlled group is a tax formula to find out if joint ownership makes you a controlled group. So, Amanda, if you own your bookkeeping business, but you also own another business that's got 10 people and maybe 2 other ones, and you start adding these up and you get the 50 full-time equivalents, every company you may have may be required to do a 1095, even though none of them are 50 by themselves. So
even if it's the same entity number or different entity number?
Different entity number.
Wow.
Yeah, and there's a controlled group calculations that I could provide someone that wants to discuss that with their tax advisors, because that's overlooked, as well as COBRA administration. Normally it's 20, but you can...
I can think of a couple people I already know have multiple entities, but have like at least 15 plus at each entity.
You got
it. They're already
there's some
sending some people your way.
there's some testing that need to be done to see if that's a situation. One thing that I always try to get people at the first of the year on board, 2023 forms. Every year insurance carriers change forms, so get with your broker, your advisor, and say, we need, of course you should be getting this anyway, all the updated forms, because they change often and they'll kick them back every time. And then the last thing that I think is very important with the day and everything I just discussed, my question is, how do you stay in compliant with all that stuff, and how do you prove it if you need to? And my answer is technology, enrollment platforms, HRIS systems. Roshni's shaking her head as well. It's not a lot of money. It houses it. It's a legit, legal, digital signature, and you can keep books forever, and it simplifies the whole program. And this is the time you implement those, not 2 weeks before open enrollment, or even 2 months before open enrollment, so you can work the bugs out, get it streamlined in order to move forward to your next open enrollment. And so that's just...
is that something you guys
Yes.
personally can help with? Like if somebody's listening and they want like, hey, I need to store all these documents. I need to create all this stuff. I wasn't even thinking about anything that they were saying. Is that definitely something you guys can help implement for them?
Absolutely.
Yeah, we have several programs depending on the functionality they need and what we're trying to accomplish.
Wow, he was like, bam, 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 bam.
Because it could have took 2 hours.
It was great. It was
and we
so
just
much.
did a podcast on this, and it was really an hour of me just talking about what you should do.
No, it was great. I mean, there was a few things in there that, like, the control thing I had no idea about either, and I have a couple people I probably need to, reference and tell them about that. But yeah, I think all that was really, really good updates. Anything coming? Do you have anything on there about any of the 401k IRA plans or anything like that changing?
I did not bring that, but yes, Secure Act 2.0 passed. Mm-hmm. There is some new laws, and I will be bringing that to a future episode on Everyday HR.
Perfect.
I'm not prepared for that at this time, but we do know those changes are there. We're kind of letting some of the dust settle and some of the questions get firmed up. But there's every day is a new day in the world of employment and HR and benefits. And like I mentioned earlier, brokers do not really cost you anything because they're paid from the provider. Mm-hmm. But if you need an advisor to keep you on track, I suggest that you go out and do it. You can call a carrier direct and buy insurance. It's the same price as if you went through a broker like us or anyone else. But you're losing out the advice as well as the secondary opinion, as well as other options, because carriers are only going to show you their options. So some people miss that, think they're saving money by not using an agency.
Yeah. And so, I mean, that's a good plug for them to go to, one of your guys' next episode, which is Everyday HR Podcast, because I know that a lot of my clients now deal with, because of Cal Savers and some type of plan. Yes. And so updating kind of those changes is going to be very beneficial for them to know if their provider, whoever they go through, isn't giving them that personal touch and telling them already the updated plans. Yeah. Now they have a resource to come to.
One thing I can say is 401k limits has been reached out to 22,500. And if you're over 50, you can put an additional 7,500 in. That's a big jump. You know, that's, for me being an old guy, I'm 50 plus. Mm-hmm. So, that's 30,000, and that's a big number. It wasn't very long ago. We were just hanging around 18. So, again, Cal Savers, I'm not a big fan of the government program. It's there. It makes sense for some people. It's pretty simple, but it's very rigid. Mm-hmm. America's not retirement ready. So the government and the state are making moves to say, hey, we got to get these people on board. And I'm totally in with that. I'm not totally in on mandatory deductions, but you can always opt out, and there's not a lot of flexibility, but we need to be thinking about retirement for sure.
That's what we pay most attention to as well. We just mentioned the Secure 2.0, but then we also have Cal Savers here in California that's specific. So there's so much information out there. I think that's part of what we do is weed out what applies, what will supersede other regulations that are thrown out too. So I think that's really important to not get so confused or get lost in all the details, but there might be some things that apply over other things too, especially being in California.
Yeah.
Welcome to California. So Amanda, what's going on in the bookkeeping world? I've seen that you've been posting some pretty cool social media stuff. What's this thing about it's 1099 time?
Yeah, so we did just post that recently, but I have tons and tons of tax deadlines coming up. One of them is 1099s, which is if you paid anybody over $600 in the year, you have to provide them a 1099 NEC. The exceptions are if they're a corporation, if you bought supplies or products or materials, or if they're from like overseas. But this one always trips everybody up every single year because they're like, oh my gosh, I didn't know I have to 1099 them, or they didn't receive a W-9, which the W-9 is what you fill out to 1099. And so, we're reminding our clients, and a lot of people, make sure you get those W-9s. You should have already had them on file before you paid the person, but now you need to be reporting that to the IRS. A lot of common questions that I'm getting is, well, I paid them through Venmo, all these third-party apps, and this kind of is going to tie into the 1099K change. Yep. So, the IRS passed something in 2022 saying that if you were on this third-party app, any income being being reported on that app over $600 would be reported on a 1099K. They then delayed it, saying that, these third-party apps weren't ready for the change, even though they had a whole year to prepare. And they said that that's not going to go into effect until 2023. However, the original limit is still in place, which is $20,000. So if I paid somebody on Venmo $1,000, which is over the $600 limit, but under the $20,000 limit, the question is, do I still have to 1099 them? Now, depending on who you talk to and if they're risk adverse and not risk adverse, some people are like, no, it's a third party app. I was told that, the third party apps are going to deal with it. And in my opinion, we don't really know, who's they're going to be reporting that. You want to write it off as a contractor, so I would still give them a 1099 for this year. That's just my opinion. There's some other CPAs who have a different opinion. So with that said, I'm still sending them out for this year, and then 2023, I am hoping that, the 1099K gets sent out and then we don't have to deal with this. With the Venmo or, these third-party apps, I will say, if they contact you saying that they did get the 1099K and they made over 20,000, that's where it can come into play, where now it's being double reported. Right. So that's why some are saying, well, just altogether don't leave it alone. But then at the same time, it's not being reported on your book. So I can see the argument on both sides. So I have clients that what I'm originally telling them to do is we'll ask the person, are you using these apps? Did you make X amount? Because if so, then I'm not going to 1099 you. But then that starts getting personal, because now you're asking them, did they make over 20,000? Right. So I don't think anybody in my industry has a clear-cut answer on what we should be doing. But before this, everybody was 1099ing in any source of way that you were paying them.
And Amanda, are you referring to strictly businesses here? Are you talking, I could be a sole proprietor doing a little arts and crafts out of my back of my house and selling stuff on Etsy and collecting via...
Yeah. So that's hobby income. So you should also be reporting that. But also when you're doing art things, that's a product, so you wouldn't need to get a 1099. But if you are a small business such as consulting or coaching, that's a service that you're providing, that may require you to get a 1099 form from other businesses.
But if just a homeowner, not a business owner, and I hire a contractor to do a job and I'm paying them more than $600, should I 1099 them?
No, so that's what I was saying. It's business to business is really who's supposed to be releasing the 1099s. Now, the law starts changing a little bit if you have domestic workers in your house, so like housekeepers and things like that, or even...
it's just like talking to Dan. There's always that gray area.
Yeah, I know. I'm fascinated.
We always start with it depends.
Yeah, it really is in tax law too. But yeah, if you have a housekeeper or even a nanny, now there's housekeeper and nanny laws that you have to now comply with, that like technically you're a person and you're employing these, and there's payroll taxes and different things you have to do for those two industries. But for anybody else, typically, no, you do not have to give a 1099 if you aren't a business.
Now that you've mentioned that, whose responsibility is it to provide to get the W-9 and get the 1099? Is it the recipient?
No, so the IRS changed the law recently that the person who's giving the money now is the one who's responsible. So it used to be like, if you ask them for it, and they said, I don't want to provide it to you, like you have proof that you asked it from them, like the IRS would be like, okay, well, they're an independent contractor, and they would go after the other person for not reporting it. But now they're saying, like, no, you have, before you even pay them $600 or more, you need to be collecting that W-9.
It's like having a new hire documents all over again.
Yep. Exactly. And then the penalty, as of right now, they're saying it's $75 per person. I mean, I don't know if it's going to go up or not. However, if you get audited and it runs into a situation where it is an independent contractor versus employee, which now you're getting into AB5, now the basic penalty for that is $25,000 for misclassifying and then back payroll taxes. So you're going to want to make sure, first that you're following the independent contractor versus employee law, which is the ABC test, and you're providing them a W-9 before you pay them, and just going forward.
And the California assumption is that they're an employee unless you can prove otherwise.
Yeah. So. And so that's definitely challenging. I think it's... the 1099 topic is so hard to go around because there are just so many different regulations all the time on it. But they're really just trying to have people report their income. And I get this all the time because this is the next follow-up question to your question. Well, I just paid somebody, I'm out of business. People think if they don't get a business license or a DBA with the state or the city that they're not a business. Right. That is not correct. To the IRS, if you are providing a goods or a service to somebody and you're getting paid, whether you have a business license or not, you are a business. So that means you have to send out 1099s and you have to comply with business regulations. It doesn't matter if you have, you should have the business license, but those are state and city and county things. Those aren't IRS federal things. Right. And so I get that a lot of people like, oh, I didn't need to hire you last year. I didn't have a business. And I see them all over Instagram posting, oh, photography here, or I'm selling this, or I'm baking this, right, or I'm doing this, and I'm out in the public. So I also see a lot of people, right, and I'm like, they're like, oh, I didn't have my business license. I didn't claim any of that, money. And I'm like, that's not how it goes. Just because you don't have a business license doesn't mean you're not a business. That's not how regulations go. So, we're trying to post that deadline. I don't think I said it's January 31st. You have to make sure you send out all 1099s for anybody you paid over $600 in the year for. That's not a corporation, somebody overseas, or that you bought supplies and materials for. So that's kind of like the first deadline. Now we have a bunch of payroll deadlines. So, fourth quarter is due on the 31st. So you have your 940, 941, your DE9s, the DE9Cs. All of those things are all due January 31st. W-2s are supposed to be sent out before January 31st as well. Your W-3 is all supposed to be sent out before January 31st, but these are all, the W-3 is a summary of all your W-2s. W-2s go to your individual employees to show them how much they made and their benefits were. And then 940, 941, DE9, DE9C are just payroll reports. So for all those, because I said a lot of numbers right there, yep. That's what all those are. And so those are all deadlines January 31st. You also have, or comment?
And I was gonna I see this more often, and we have enough time for employees to get ahead of, this is a perfect time to have your employees update their addresses, make sure you have their right social security number, because once you get that bounce back from the Social Security Administration, it's going to take far much longer than to just have them update.
Great. We just posted that today.
I was going to say,
my social media director
in
here, and she just posted, she's like, make sure you update your address and all this information, and make sure you're updating it with people you don't work with anymore, past jobs, because they're sending out W-2s right now. Additional deadlines, we have sales tax. Either it's, if you're yearly, it's due January 31st. If you're quarterly, quarter 4 is due January 31st. So those are also additional deadlines that we have going on here. In addition to that, you have January 17th, which is fourth quarter estimated taxes are due. Beyond that, you have January 15th, which is if you're an LLC or corporation, your tax return is due, in addition to the $800 with the Franchise Tax Board for being an LLC or corporation in the state of California. So March 15th is that coming up deadline. As I said earlier, the IRS delayed the 1099K. So again, you will not be getting those 1099Ks from the third-party apps. If you made over $600, it will only be if you made over $20,000. And then the last thing I have to talk about is the IRS posted today that if you are in the California area where it's flooding, there are extensions for you automatically. You just have to say you're part of that emergency relief, and you have an automatic extension to file for your taxes this year.
That'll definitely be one to watch closely.
Yes.
Yeah.
I think that's all of the wonderful deadlines. I try to go through really, really fast on all of them. But yeah, these are also, if you're listening to the podcast, following us on social media, or working with us, these things are, if you're on my newsletter, I've already been sending it out and sending these reminders. Hey, I've been sending them since October. Hey, get your W-9s. Hey, get your W-9s. Hey, okay, now it's file your 1099s. File your 1099s. Every single week, it's a reminder to my newsletter people. And then, we're posting reels and TikToks and, Instagram posts. These are the deadlines. Make sure you're saving this post and you're remembering these deadlines because you don't want to miss them.
Definitely takes a lot. It's all about the communication to be informed.
Yes.
Sounds like you need a team out there to me. If you don't have in-house people, you better have some advisors, because there's just so many moving parts, and trying to run a business and do what we just talked about in the last hour is overwhelming. And if someone was listening to this, I'm sure they're sick to their stomach, because I know we live and breathe this, and this is what we do. And we love to provide that, that defined service. So if you're a listener out there, reach out to us if we can assist you in any way. We would love to partner with you and show you our expertise.
Well, I appreciate both of you coming on, and I hope our listeners, learned a lot. And like I said earlier, I kind of want to do this, hopefully every January to, this is the podcast they come to listen for like the updates for the new year and, get all those tax deadlines and new HR and benefit compliances and things. And I think this is going to be a very beneficial. I hope a lot of people reach out or, share this to everybody, because this is information that if you run a business of five or more, you need to know everything that we discussed today.
Yeah. No, we appreciate the opportunity, and it's kind of weird for me. I'm a co-host on both podcasts, Our Two Cents, as well as Everyday HR. So I'm glad I wasn't the person moderating today, because I would really have screwed it up. But you did a great job, and we do think that there's a lot of value to bring this to our listeners every year, and maybe even more periodically than that. But we appreciate the invite for sure.
Thank you for having us.
Of course. Thank you.
This show has been brought to you by the Law Office of Kyle Jones, Troy Burton with the Lynn Company, CPA John Duffield, Scott Hansen Real Estate Lender, broker and investor, Dave Plivlich, President and CEO of the Marcom Group and MarcomBranding.com, and Amanda DiGiacomo, President of Atlas Financial Solutions. You've been listening to the Our Two Cents podcast. Check out the show notes for links and more information about the show. Also visit our website at our2centspodcast.com or catch us on Instagram at Our Two Cents Podcasts. If you've enjoyed this podcast, please subscribe and share with others.